portfolio power play. That's what we call it. I hope everybody is doing well. And what I'm going to do is answer your questions. So put your question in the Q&A section. If you put your question in the Q&A section, I will be able to answer it appropriately. And so what I want to do is kind of talk about what I'm seeing right now in the markets as far as possibilities and opportunities, and also I do have some stocks that I gathered for you guys this week. If you log in at drboystocks.com, drboystocks.com, that's where they're listed. And what I'll do is I'll mention a couple of them while we're in class here. So anyway, let's see here. Okay, so first thing I see is I see some stuff going on in terms of Disney. Disney is actually breaking even on their streaming, which is very surprising because they. It's really surprising that Disney was doing so badly the last 5 years. And it's really also surprising that they were able to kind of improve as much as they have. But the fact that their revenue and profit went up because they're finally getting close to breaking even on streaming is really surprising. Because if you remember, 5 years ago, streaming was supposed to be their big cash cow. That was going to be the thing that was going to just make an insane amount of money because they thought they could just come in and eat Netflix's lunch. And Netflix pretty much showed that they have abilities that Disney does not have, and so Disney became this really terrible investment. Tens of billions of dollars in value was destroyed, and the managers were accused of mismanaging the company. And this happens all the time. Whenever people lose money, this is what happens. There's always like a big fight and stuff. Kind of similar to the Tulsa real estate fund. I guess they lost a lot of money, so a lot of people were fighting over it. Well, in this case, they were fighting over billions of dollars. There was a big proxy fight, and there's a guy named Nelson Peltz at Disney who felt like or he was a shareholder who felt that they were just doing something immoral and taking money from the shareholders and all this other stuff. And so they had the proxy fight, and Peltz lost the proxy fight. But what has occurred is Disney is now doing better. The stock price is doing better. I actually have been an owner in Disney stock for a while, but I didn't buy more shares because I didn't feel that Disney was doing what it needed to do on behalf of shareholders. But now it looks like they're trying to get things together. And it's really surprising to me that that their big surprise was we're able to break even on our streaming. That's kind of crazy given that they were expecting streaming to be a huge profit center. And also Disney, just since we're talking about Disney, their other problem is that regular cable TV is dying, and as cable TV dies, you're seeing these companies scrambling to figure out like what's the next move when it comes to streaming. Like Paramount's really, really having a hard time. They're actually they're talking to different buyers. They have this family, the Redstone family, that has there's a woman in the family named Sherry Redstone who controls a big, big percentage of the voting shares in Paramount, and they're just ruining the company, absolutely ruining it. And now, in case you want to know, they actually own BET, by the way. And so these weird white people own BET, which is pretty hilarious. So that's an interesting little battle that's going on. There's a lot of and I think that one of the interesting things is that generally speaking, it's not surprising to see fights over money. Usually, when money gets lost, that's when you start to see the battles. A lot of the battles get settled in court. Some of them become PR battles. Some of them become what they call proxy fights. And so this is as common as the day is long. Happens all the time, everywhere, and everyone's accusing each other of doing terrible things. So anyway, let me hop in and answer some of your questions here. What do you think about the ticker symbol? Okay, so Shaquana, you're asking about selling call options. We're going to have a meeting of the prime students later on this week on Thursday. First off, quick answer would be no. I haven't studied Lyft. Lyft is if you log in at drboyceprime.com, there's a list of Dr. Boyce money makers, and these are about 20 stocks I found that I believe are excellent candidates for selling call options. Every stock you can do this. Maybe 2 or 3% really make a good income drivers. Not to say Lyft couldn't be in that category, but I'd have to analyze that, and that will be during class. So if you log in at drboyceprime.com, there is a link where you can leave me a question. I just answered a bunch of you guys' questions the other day, and I sent you all a text link to go and take a look at that video. So if you want to go take a look at that, you can. And also, you can leave a question there for that. And then also on Thursday, we're doing the Prime class, and then Saturday we're doing a Q&A for beginners. So if you are a beginner in what we're doing in Prime, then we're going to make sure as a beginner that you get everything that you need. So just log in to drboyceprime.com and you can take a look at that. All right, so let's see here. Audrey says, how do we join the $5 a day club? The link in the book doesn't work. Oh, okay. You know what? I haven't seen the link in the book, but let me give you a link that I definitely know works. If you go to blackwealthmasterplan.com, I'm going to put that right here in the chat. Blackwealthmasterplan.com. That's where you can get the $5 a day plan. And the $5 a day plan, I'm really excited about. It's easy, it's free, and it'll change your whole life. But you got to give it time. It'll take any family out of poverty in less than a decade. If you do what we tell you, it's very easy for any family to get out of poverty in a decade. It's very, very, very easy to do. And so the $5 a day plan is your easy pathway to get there. And I hope you'll consider taking a look because it does work. And basically, after about 10 years, you're really talking about maybe $29,000 liquid, or give or take a few $1,000s. So the reason I say it gets every family out of poverty is because I don't know a single poor person who has $25,000 liquid in their bank account. So ultimately, that's the plan. That's the master plan. That's how we're getting it done. All right. So let's see here. All right. So one of the other things. Um, One of the other things that I wanted to mention as well is the future of the stock market. Warren Buffett is an interesting guy. He's super smart. He really reflects the power of compound interest. I think he started investing tiny amounts of money in 1942, and now his company Berkshire Hathaway is sitting on a record of like $189 billion in cash, which is absolutely insane. And a lot of this is a reflection of not just Warren Buffett's high level investing savvy, but it's also a function of the fact that he's just a hoarder. He's really a hoarder. He's a guy that is worth over $100 billion, and he eats McDonald's cheeseburgers and drives a hoopty and lives in a tiny little house. I don't know what all that money's for because I think he's giving a bunch of it away when he dies. I don't. I'd love to understand his financial psychology. Like, what was the point in accumulating all that wealth? It didn't seem like you allowed yourself to enjoy it very much. And hoarding actually is a mental health kind of thing. I kind of think that that might be what's going on. But either way, though, the benefit of hoarding is that he's got lots and lots of cash. And one thing that's interesting about Buffett, as he gave his annual speech at the Berkshire Hathaway shareholders meeting, they called it the Woodstock for capitalists. So he gave this speech, and he was talking about um, well, they first of all they were giving appropriate praise to his long-term business partner Charlie Munger, who just died. I like Charlie Munger a lot. I really did. Charlie Munger was, I mean, he was a fighting OG. He would get up there and he would just say, "That's stupid. Bitcoin is stupid, and Facebook is stupid," and he would just say whatever he wanted to say, and I really love that a lot. But then also, in addition to giving praise to Charlie Munger, he answered that question of why they haven't deployed that $189 billion of cash. And basically, he said that there's not any good opportunities out there, no good buying opportunities, which is very surprising for a lot of people because people are making acquisitions all the time. And they're like, there's nothing out there, like nothing looks good to you. And literally just felt like he feels like there's nothing good out there, which is just really interesting. It's like that person who gets asked out on a date every single day, and you say, well, why aren't you dating anybody? And they say, well, because nobody's any good, but you've been asked out 800 times and you're a very pretty lady or you're a very handsome man. Why haven't you picked somebody? So he's very picky, but at the same time, there is a belief that somewhat speculated that to mean that he believes the market is going to have a crash, that there's going to be some point where the stock market valuations suddenly drop, where there is either a crash or a correction, whichever one you want to call it, and prices just start to deflate, and that's when people like him come in and start buying things. And this is part of that investor psychology that we talk about, where the best investors are people that come in and they buy. They're running toward whatever people are running away from. So when the market drops, a lot of people run away from the market, but then there are people like Warren Buffett who run toward the market and they start buying everything they can because they know this too shall pass. So that's something to keep in mind. That's a consistent conversation. The recent economic data showed a slight slowdown, but also we still have inflationary problems, which could create something called stagflation, which is really a tough double whammy for the Fed to deal with, where you have high inflation and a slowing economy. Typically, high inflation means your economy is roaring, or a slow economy means at least you don't have an inflation problem. But if inflation and a bad economy show up at the same time, it's like I don't know. It's like getting fat every time you exercise and eat healthy food. Like, well, you can't win for losing. If somebody says, "Well, stop eating cheeseburgers, eat healthy food," and you say, "Okay, great, I'm going to eat healthy and I'm going to eat vegetables every day," but the vegetables make you fat, what are you going to do? Right? What are you going to do? Because now you don't know what. Like, I can't. What do I go back to eating cheeseburgers? No, that's not going to help. But I'm eating carrots and lettuce, and that's not helping. So what do you do? So that's kind of what the Fed is dealing with stagflation. So if they start using that word stagflation a lot more, if you start hearing the word stagflation a lot, I would encourage you to be considerate of what might be going on. Now, Calvin, you mentioned identify the source. I just read stuff everywhere all the time. I go through financial podcasts all day, so I don't even remember where. Like a lot of times when I talk about something, it's a compilation of information I've gathered from multiple places. So, like stagflation, I've been studying that for 30 years. So where that came from, I can't say exactly. But so I wish I could give you a specific source for that, or like even the Warren Buffett event. I just would hear all these different podcasts talking about it, and so I thought it would be interesting to kind of discuss just from a financial psychology standpoint. Okay, so by the way, Shaquan, I saw you were asking a question about a link inside the Prime program. If you log right in, if you go into your Prime access material, you'll see a link right there at the top that you can click on to leave your question for me. And if you can't find it, just email support@theblackbusinessschool.com and they can take good care of you. They'll make sure that you get everything you need. So just email support@theblackbusinessschool.com. Calvin, any good REIT recommendations? A lot of like these funds, Vanguard and stuff like that, they have real estate investment trusts. So I would look up and see what funds Vanguard has, or if you search for REITs, REIT, inside your Robinhood app or whatever app you use, you'll just see a bunch of them in there. And I'd say something related to Vanguard or BlackRock or something like that would be good. But you really can't go wrong with that. It may not, REITs aren't something that necessarily going to give you a lot of capital gains growth, but they do give you exposure to the real estate market. A lot of people think that to get exposed to real estate, you have to buy real estate. You got to go buy a house and go talk to the bankers and all this other stuff. You don't have to do that. You really don't have to do any of that. You literally can just buy a real estate investment trust and it works out just fine. And those of you that are in Prime, you've seen that literally even the income and liquidity that comes from selling stock options on that same amount of capital is actually much higher than what you would get in real estate. Plus, you don't have to evict people and fix toilets in the middle of the night and all that. I don't like being a landlord. I get these calls about the property, something broke and we got to pay for it, or whatever. And I don't like it, not just because of the money; it's really the time. But even by the time we factor in all the money, we don't make a big profit from it. It's not like the cash flow is really good. Whereas if you take that same amount of money and you go buy 1,000 shares of Facebook, you can make $8,000 or $9,000 a month off that and not do any work at all. And so I personally think that is a better income generating strategy than real estate, in my opinion. But then again, it's just my perspective. Owning real estate can be beneficial, but remember, you can own real estate through a real estate investment trust. All right, so let's see here. Elijah says, "What are your thoughts on PLT or Palantir after the good news? Do you trade Palantir currently?" Yes, I do own Palantir. Um, I like it as a good long-term investment. That's what I'll say about Palantir. I own 100 shares of CHRS. It's not doing well. Should I bail out? Well, Dwayne, there is no really should. Like, this is not investing advice, right? But, remember, when you say it's not doing well, I think you have to ask yourself, what time horizon have you given yourself to determine if this is a good investment or not? If you're judging the stock based on what you've seen in the last year, that's not enough time. That's just not. Warren Buffett, says if you can't own a stock for at least 10 years, you shouldn't own it for 10 minutes. That's what he says. 10 years. I don't think 10 is required, but I do think that like 5 or at least 3 is a bare minimum, right? So if you say, well, gosh, this stock's a dog, I'm getting out of here. Two things that come to mind, two areas where I would encourage you to reconsider your investing approach is one, did you give yourself enough time? And two, did you give yourself enough space? Time and space, being broad in time and space is really important when it comes to having investor mentality. What do I mean by that? Well, and I want to be careful because I'm thinking like a statistician now. I'm picturing a panel data set where you've got a bit broad cross section and a long time series, but don't worry about what those terms mean. We'll talk about it later. But basically, the thing about investing is you never want to be at a point where any one stock is really going to bother you that much. If one investment bothers you so much that you're just mad about it and thinking about it and worried about it, then that means you're not diversified enough, right? You have to spread your money out. You can't put all your money, I don't put more than say 5% of my wealth in any one place. You spread it out, right? So, I've made this point a lot, and I don't know if people hear it or not. It's kind of unfortunate because I know that people have put their money into things and it doesn't go well, and then they're all frantic about it and saying this is why I don't invest or investing's bad. And it's like, no, investing's not bad. The approach was bad, right? Because you're going to lose money. You're going to have investments that go bad. But you want to spread your money out, right? So that's the first thing. The second thing is going back to that issue of time. Did you give yourself enough time to even see what this company is going to do long term? So maybe the stock has a bad year or a bad 2 years. Facebook, Mark Zuckerberg, his stock was a complete dog 2 years ago. 2 years ago, everybody said he was an idiot because he was investing billions of dollars in this metaverse thing. The company was having all these issues. They were being called to Capitol Hill. Zuck was being called a criminal for stealing people's data and all that. A year later, that stock doubled. That stock doubled in value. And it suddenly became the hottest stock on Wall Street. His wealth went up 60, 70 billion dollars in that year. So things can change very fast. That's my point. Things can change very fast. So I'm not telling you to stick with the stock. I'm not saying that at all. I'm saying, why did you get involved with that stock in the first place? And if you believe whatever fundamental value about the quality of the business, the quality of the industry, whatever your fundamentals were that drove you to make that investment in the first place, I think a question to ask yourself is, do I still believe those things about this company? Or has something materially changed in the way this company is running its business to cause me to feel like I should not be an investor anymore? Do you understand? Let me know. Give me a yes if that's all making sense. It's about the quality of the freaking business. That's what drives you. And so let's say that you say, gosh, you know what? This stock isn't doing so great, but I kind of like it. I still believe in it. Then when the price dips, that's an opportunity. You buy more shares. You say, since the shares are now half the price that they were when I paid for them, I'm going to dollar cost average into this stock, and I'm going to ride this pony for the next 5 years and see where it gets me. If you don't believe in it, then maybe you don't invest. Maybe you just hold, or maybe you go ahead and sell. You bail. The other thing too is you got to be really careful about picking one company in an industry. So if you find out that EVs, everybody knows EVs are eventually going to be a thing. Everybody knows, what else does everyone know? I believe everyone should know that cannabis is eventually going to be legalized or something or whatever. They can't make it criminal forever, in my opinion. Well, if you believe those things, then, it probably doesn't make sense to pick one cannabis company. It makes sense to have a diversified portfolio of cannabis companies. I'm telling on myself because that's what I have. I have ownership in a bunch of different cannabis companies. I bought shares in the cannabis ETF. I don't remember the ticker symbol. And I'm just sitting on it. I'm sitting on this egg that I'm hoping will become a golden egg that will give me a golden goose. But here's the other thing that you have to confront is that sometimes the things that you think are going to happen may never materialize. It may never come around. You understand? So investing's kind of funny like that. I also highly recommend, in my opinion, again, not investing advice, my preference. I don't, all the dabbling in these like stocks that are like 85 cents or these stocks that are like not trading on the NYSE and or the NASDAQ. I don't think that's healthy at all. I think that will cause you a lot of distress. I think these solid companies that are kicking ass, making money, Nvidia is making money, Facebook is making money, Tesla is making money, Google is making money, Microsoft is making money, Coca-Cola is making money. Exxon is making money. There are so many companies. Apple is making money. All these companies are making money because they have strong, solid business models. So if you're every week you get a couple extra dollars and you're buying a share of this and a couple shares of that and a few shares of this and a few shares of that. The next thing you know, you're rocking with, you are vibing with, you are riding on a train with the greatest companies in America. Your wealth is tied to their wealth. Well, guess what? When their money goes up, your money goes up, and we know that their money is always going to go up because they own America. Right? That's my speech. I hope that it was helpful to you. Um, all right. So, if you don't know, just a reminder: if you want to see me in real life, I am going to make an appearance at the Get Money Fest. I don't do a lot of speeches anymore. I don't like to travel, but I am going to go to the Get Money Fest hosted by Jay Ortiz because I just like Jay, and I just think I love it when rappers want to be financially literate. So the URL is getmoneyfest.com, and here's a link if you want to uh show up. The I think the passes are free if you're standing room only. If you want to be in the VIP section and sit down and all that, I think you have to pay something. But it's up to you to decide if you want to attend. If you live in the Philadelphia area, feel free to come in. A lot of great experts are going to be there, but they're also doing music and fashion and art, and I really love that a lot because I saw what they were doing, and I said, you guys should be owning this culture. When you're making the music and the fashion and the setting the trends, you should be the business owners that are also profiting from this. You have to build institutions around these things that you're developing. You have to build business entities around your creativity. And so I've encouraged a few people in the music industry and whatnot to really understand this and really understand business as well as they understand everything else. And so the Get Money Fest is something that they're doing, and I told them I would support them because I really like to see young people be smart about their economics. So there we go. That's why I'm going to be in Philadelphia. It's May 18th, and I'll be there a couple hours. I think it's 6 hours long. All right. So anyway, all right. So let's see. Terrell says I had to get the stop loss on Paramount. It sold earlier this morning. Do you think Paramount's a long term hold? Whoa, good question, Terrell, about Paramount. Paramount. Oh gosh. Here's what I think. Right. I think that Paramount's going to get bought, but it's complex because the Redstone family really structured the business to give their family an extraordinary amount of control. And because of this, it's blocking their ability to really get an adequate offer for this valuable company. People want to buy it, but they don't want to buy it on the terms that the Redstones are asking. And also, even the shareholders don't want to sell it under the Redstone terms because what blocked their ability to make a deal with Sundance, from what I understand, is that people were like, wait a minute, so Sherry Redstone's going to get a big payday, but the shareholders are going to get diluted. We're going to get our butts kicked. So they didn't allow that to go through. Now they're negotiating again with another company. I don't know what company it is, but I can't remember. I don't know if it was Sony or something. But and so I believe at some point they're going to get bought, right? So if you believe that this is going to occur, then that might make Paramount into a good purchase if you happen to believe something or know something that the market has not figured out. Um, so maybe it's worth looking into, but remember, this is you're kind of at a point of speculating and gambling. Let me tell you this: Warren Buffett just sold his shares of Paramount. He sold it and he apologized to his investors. He said, "I made a bad call. I shouldn't have invested in this company. They've lost billions of dollars. I lost a lot of money. Sorry." And that's kind of what happens, right? So I don't know. I also remember reading articles about Paramount. There was a long Wall Street Journal report about how Paramount Plus was being run, which was just hilarious. They have this writer named Taylor Sheridan who does these shows for them. He does some really good shows like Yellowstone and another one called 1932, and there's another one called 1883 or something like that. And then he did Bass Reeves about the black sheriff, which is also a good show. My wife and I watch it. So because he's such a good writer, they gave him like a blank check to do whatever he wanted. So what Sheridan did, Taylor, was, according to this article, he screwed the company in terms of just letting the costs get out of control. Like he was explaining to other farmers like, these Hollywood people are stupid. They're bleeding money. They have an endless supply of money, and they'll he said you can shoot a film and rent your farm for $50,000 a day. So he would rent his own property to Paramount for 50,000 a day, and then he would fly in horse trainers from Dallas, even though they had horse trainers right there in the state, but he would fly them in from other places, and he was really jacking up the cost of everything. So here's what happened to Paramount, and this is kind of a business lesson in terms of really thinking and making sure you're balanced in terms of cost benefit analysis. So what happened was when Taylor Sheridan was given this blank check to spend hundreds of millions, if not $1 billion on shows, the streaming service got 1 million new subscribers. Yahoo, woo, that's great. But at the same time, they got 1 million new subscribers to Paramount Plus. They lost $1 billion in revenue. They had a net loss of $1 billion. So the shareholders were like, "This is great that his shows are hits, but having a hit is not the same as doing good business." And that really actually speaks to some of you that may be thinking about, or maybe you can observe this, right? This is happening, I think, in the content creation space right now. Everybody, when I first started, doing podcasts and all that, and doing YouTube videos and all that, in the beginning there weren't that many people doing it. Like I created my first YouTube channel in 2007. I didn't get serious with YouTube though until 2013. But in 2013 up until about 2020, there weren't that many people doing that type of thing. Then 2020 hits. Everybody and their mother has a podcast. Everybody and their mother, right? So podcasts are everywhere. There are a dime a dozen. There's tons of content. It's almost impossible to take it all in. And what has happened, I think, is that people are creating content without thinking about the business model connected to the content. They want to look good on YouTube. They spend money. There was one guy who did a podcast. I think it was called The Pivot or something, or maybe it wasn't The Pivot. It was the one before The Pivot, because I think the guys from The Pivot were pivoting away from another Brandon Marshall. I think that was his name. I met Brandon Marshall one time, but didn't talk to him. But it seemed nice. But anyway, I remember hearing how much he spent on his podcast. It was millions of dollars, and I was like, why would you spend millions of dollars on a podcast? That doesn't make any sense. I shoot my YouTube videos on Zoom in my office in my basement. I'm not going to go spend millions of dollars podcasting because it's just content. Content does not necessarily monetize very well, right? YouTube, sure, you can get a little bit of money on YouTube and all that, but it's not enough to justify spending insane amounts of money on the content. Now, what I think he was thinking was, I'm going to make this amazing podcast. We're going to look really good on the podcast. We're going to get a lot of views, a lot of social media clout, and then eventually some white person with deep pockets will come along and purchase this content from me, which does happen. I think ESPN paid tens of millions, if not, I think $100 million for one guy, so Pat McAfee or something like that, and Shannon Sharp. I think Shannon Sharp is doing really well with his club Shay Shay and all that stuff. But that's kind of few and far between. So what you kind of have now in the content space, in my opinion, is a bunch of people with all these channels kind of just talking about each other, and they're having all these crazy conversations and big fights and embarrassing themselves because they're trying to be the one that gets the most attention and the most views. But I'm not sure that translates into an adequate business model. So I think Paramount Pictures made the same mistake because they were thinking, if we just get the subscribers, if we just get the views, then we've won the competition. And this is actually even a better business model than people running YouTube channels, because at least with this business model with Paramount, the more subscribers you get, the more revenue you get, because each subscriber is paying money to see the content. So ultimately, I think it's really important to just understand business models when you're moving forward. Also, I think being conservative goes a very long way. A lot of these media companies, in my opinion, are in trouble because they were just so aggressive, and they would go just borrow all this money because they had to expand by any means. And sometimes running a high quality small business is better than running a sloppy gigantic behemoth, or something that's like a bigger platform that isn't properly monetized and isn't properly managed, is not gonna be it's eventually going to crush itself under its own weight. One example of a company that you can look up is, there was a guy, I think his name was GigaOM or something, or they called him GigaOM, or maybe the company was called GigaOM. But if you look up like the GigaOM fiasco or something like that, you'll see the story. Let me see if I can find it. I think it was called GigaOM. Anyway, so this company, this company like was run by this guy. Let me see if I can find. Yeah, it was called GigaOM, And this was in the early like 2010s. This is about maybe 2013, 2014. This dude was making an insane amount of money. His company was making like hundreds of thousands of dollars a month. He had all these employees. He was kicking butt and taking names, and it looked like he was really succeeding. But the problem was, here's what happened, right? Because his company was so strong and Silicon Valley had access to so much cheap money, they loaned him like tens of millions of dollars to the point where the company was making money, but it was saddled under an insane amount of debt. So he would make, three, 400,000 in a month, but he'd have to spend over a quarter million a month just paying the interest on this debt. So one day, out of the blue, he just announces like we declare bankruptcy. The company no longer exists, and people are like, "What are you talking about, dude? Like you're getting a million views a day, and this platform's really killing it." Was because they were trying to grow too fast. That business could have been great. It could have still survived if they had a more conservative approach to business. I'm a big believer in being tight and aggressive. This is actually how I play poker, by the way. I don't know if you don't know this or not. Poker's a lot like investing, actually. It's a game of strategy, psychology, and math. And I'm a really good poker player. I don't know if you know this or not, but I've won tournaments with 700 or 800 people because it's not just the luck. It's like understanding who you're playing against and how it all works, right? So anyway, with poker, my one of the styles I learned was from a guy named Doyle Brunson who plays tight and aggressive. And what Doyle basically says, and this fits with investing, by the way, this is why I'm bringing this up. Doyle Brunson basically says that if you're gonna get involved with a hand, go hard. Don't be scared. Go 100%. But most of the time, don't get involved at all. If you're not sure, don't get involved. If you don't think it's a good move, or if you're questioning things, just sit back. Just don't make any moves at all. But when you make that move, you make that move with clarity and precision, right? And that's the style that I play with. Either I'm not involved at all, or I'm going all the way to the finish line, or I'm going to score the touch. I'm going to dominate the entire hand until I realize that I need to retreat or make an adjustment. So for the most part, in business is kind of the same way, tight and aggressive in the sense that you should grow aggressively, but you should grow aggressively in a very conservative way. You shouldn't go chasing waterfalls. You stick to the rivers and the lakes that you're used to. Shout out to TLC, and I really think that this actually is a good investing strategy where you can build a solid institution without sort of putting yourself in all these goofy situations. One company I really love in terms of how they grew was Mailchimp. Mailchimp, I don't think they took on any debt. They didn't take any venture capital money. They just bootstrapped that sucker, and now this company probably generates billions of dollars a year. And the owners, I don't know who the I got to go look up the details of who the owners are and stuff like that. But they didn't put themselves in a weird position dealing with a lot of chaos and debt and everything else. So just kind of think about that. And actually, in case you're wondering, like even when the in the Prime program, I designed that to be very conservative. When you're selling call options, that is a bearish conservative strategy. That is a strategy where you say, I don't really need all the upside. I'm not dreaming and speculating about all this extra money I'm going to make. I just want to get my cut, and I'm happy with my cut. I'm not counting anybody else's money. If you make money too, that's great. But you making money has nothing to do with how much money I made. And I'm not going to sit here and greedily wish that instead of making $1,000, I wish I'd made two. I'm happy with my thousand. I'm happy with my 3,000 or whatever. So ultimately, I think that that's something to consider in terms of your investing strategy. But everybody has a different approach. But I think you can be expansive and conservative at the same time. Build strong, but make sure that what you're building is very sturdy. Okay, so anyway, let's move on. Next question. Elijah says, hypothetically, if you believe the market's going to crash, would it be good to keep your money liquid and sell puts at prices you perceive to be bottoms? Um, that's a possibility, right? A lot of investing, Elijah, is very much built on almost like your financial religion. Like, what do you think is going to happen, and based on your research and your analysis. And so, if I believe that the market was going to crash, um, I don't think I would sell puts because then you're going to have to pay all that insurance once the stocks drop. But I might buy puts, right? Maybe buy puts. Maybe do things to protect my gains to this point. Stop loss orders. I know in 2021, one good move I did make. We all make good moves and bad moves. But one good move I made was I took a big chunk of my money out of the stock market because the market was doing so well, and I put it into real estate. And then the next year, the market crashed pretty bad. And so that made me happy that I put my money into real estate because my property value was going up as the stock market was going down. But that was one of the good moves I made. Sometimes we make bad moves, right? And a lot of being an investor is having the ability to tolerate when you make mistakes and not feel like that's the end of the world, right? Just know that that's investing. Warren Buffett loses money just like everybody else, just like Michael Jordan misses shots. So don't beat yourself up if you lose money. Just try to maybe use that as an opportunity to understand what happened and and what your next move needs to be. Let's see. Do you need Robinhood Gold to trade options? No, not to trade options, but to sell them. To sell options, you just have to own the stock. Robinhood Gold you can use to get margin and some other benefits. Let's see. CHRS was bought from options trading, not to hold. Okay, if it's bought for options trading, then I would sort of look at the premiums and try to see. I don't think that company's on our list of money makers. So I don't know what the premiums are on the stock right now, but I would look at the premiums and kind of decide if you can live with that. If you're happy with the premiums, to me, if I'm happy with the amount of money I can make from a stock by selling the options on it, then I'm not real concerned about temporary dips in the price. I look at it like a business. You know, if I have a business, I don't care what my business is worth. All I care about is, does my business make money right now? Most of us, when we start a business, what do? You pour a bunch of money into it because you got to pay expenses, you got to pay people, you got to buy stuff, and then but you can't get your money out. You can't get your, if you start a black owned business right now, you won't be able to get your money. There's nobody out there that's going to be able to buy your business for what it's worth or what you put into it. So you just kind of deal with it. It's a lifelong commitment. You're married to that business to some extent. And if you walk away, then you're gonna just be walking away. You're not. It's not like it's easy to just package it up and go sell it, right? There's a market for that sometimes, but sometimes there's no market, right? You built your shea butter business or whatever. You like, what are you gonna do? I'm selling my shea butter business to you. Like a lot of those transactions don't happen. There's not a liquid market there. So basically, your win is the cash flow. What are you doing it for? Why are you putting this money in this business? You're putting it in so you can get the cash flow. I want to start this business so I can quit my job and generate enough income to pay all my bills, and then I'll be financially free. That's what you're doing. So the reason I like stock options as a better approach is because you can do the exact same process, take a bunch of money, pour it into an asset, except instead of putting it into your shea butter business, you're putting it into shares of Facebook or shares of a firm or shares of Marathon Digital, and then they're making money for you, and you're getting the cash flow, which is which is instant, right? When we did the stock options summit, a lot of you were there in Los Angeles. I explained to you, I said, if you have a little bit of a capital base to invest the same way you would invest in a business, I can show you how to make money on Monday, literally. And you did. A lot of you made money on Mondays. One of you sent me a screenshot of $4,000 you made on Monday. And so literally, the difference is that this business makes money instantly. It's much more liquid. It doesn't require any work. And when you want to pull your money out, you can just pull your money out. And when you want to give yourself a pay raise, you can give yourself a pay raise. So what does that mean? Well, with stock options, which is why they're so beautiful, is that you can actually sell risk and you can sell time. All you do is you manipulate the expiration date and the strike price, and you change those things, and the next thing you know, you get more money. So let me give you a real life example. If I have 1,000 shares of a company, like I don't know, let's pick a simple company. Let's say it's let's say it's Facebook or whatever, right? So let's say I have $1,000 in my bank account, $75,000 that they would pay me because I just sold the rights to my stock. If anytime between now and next June of 2025 it goes past 490. So if I believe Facebook stock may not have a lot of upside, or I'm okay with selling it out, just selling that upside, right? Because process this, right? If the stock is 470 and the strike is 490, I get $20 of upside that still belongs to me. So if my stock does go up, I get another 20,000 from the increase in the price. But then I also sold that call option for 75, which adds 75 to the 490. So really the stock would have to go from 470, which is where it is right now, up to like 565 for me to feel like that was a kind of a bad deal, or for me to have a little bit of FOMO. But even FOMO is optional. FOMO is optional. FOMO, fear of missing out, like, oh, I could have made so much more money. FOMO is it really it's very closely it's the cousin of greed. And what I mean by that is if I made $75,000 on the transaction and then I got another 20,000 when the stock went up, I made damn near $100,000. Why the hell am I counting other people's money? Why am I mad that I made 95,000 instead of 112,000? That's a choice. That's optional. So I have the option of just saying that's the choice I made based on the information that I had at the time. And that's all I got what I got my piece. I'm happy with the piece that I got. So this is where financial psychology is really important. I wrote my dissertation on financial psychology. You'd be amazed how mindset shifts everything when it comes to making money, keeping money, and understanding money. It's all connected to psychology. My wife is a therapist, and we talk about this all the time. So process your mindset when it comes to your investing. How do you view it? How do you view a loss? How do you view a gain? There's a guy that just died named Daniel Kahneman, who was one of the greatest thinkers in the area of financial psychology, and he helped us discover little basic things like how people sometimes they call it loss aversion. People sometimes fear losing more than they desire a gain. Right? That little things like that, or some other things he said. I can't remember all of his principles, but I remember reading his research papers in graduate school, and there's a massive field of financial psychology. So master your mind, and that'll help you master your money. They're deeply connected to each other. Okay, how you approach your investing is everything. Your mindset is everything. Okay, and so by the way, we're gonna meet for Prime this week. If stock options and selling options and stuff is your thing, or you're interested in that, you can feel free to join us. Just go to drboyceprime.com. You can sign up there. Also, if you text the word money to 87948, text money to 87948. I'll send you a training I did called How to Make Money Without Working. That introduces you to exactly what I just described, and that's a real transaction. I literally looked that up on my phone. Those were not made up numbers. Those are real numbers. I could get that. I could pull that cash. So think about it. When people talk about like owning real estate and they talk about pulling cash out of your real estate, what are they talking about? They're talking about things like getting a HELOC and going to the bank and filling out all the forms and have them loan you money and telling you what your loan to value ratio is, and then you get the difference between the loan amount and the debt of the property and all that. Okay, great. But I think this is an easier way to pull cash out of your property. If I own 1,000 shares of Facebook and I can instantly get on my phone, tell me if you're following this. Let me know if this is making sense. I don't want to. I go on this tangent, but to me it's an exciting tangent because I think this is a breakthrough that we don't discuss enough. I can get on my phone and in 3 minutes, I can pull $75,000 out of my 1,000 shares of Facebook. How powerful is that? And then imagine if that's your kid like 20 years from now. And because you've been buying them, 10, 15 shares of stock every week or whatever, and you've done that since they were a little kid. Now they own 1,000 shares of Facebook. So they're like, oh, I need 75 grand. Let me go borrow from myself, right? Let me go and sell this stock option and get 75,000, and I could have done that same example and gotten $100,000. 75,000 was kind of middle of the road. If I sold a little more time or picked a different strike price, I easily could have moved that number from 75 to 100,000. So to me, that is a type of financial power most of us are not having. Most of us don't have that financial power because we live under the assumption that our ability to have access to money or income is determined by somebody else, right? We believe that I can have more money if my boss gives me a raise, but that's determined by your boss. That's not determined by you. We believe if I want to make more money, I can if I get a I can make more money if I get a better job. Well, that's not determined by you. That's determined by your potential employer. But or I can build a great business if I can get the bank to give me a loan, but that's determined by the bank, not by you. That doesn't feel like freedom to me. That feels very stressful, and it is stressful. It actually makes you depressed. Studies show that when you can't control your life or your outcomes, you get very sad about that. It affects the serotonin in your brain. So, what I like about this, what I love about this as a human being, and really as a black man, is I love the idea of controlling my own destiny. I love the fact that I get to be in my world, I get to be a financial god. I get to decide what's going to happen. The white man's not my financial god. I am, and that's an awesome feeling. So I want your kids to have that feeling, and you can give that to them, and you can give that to yourself. It's right there in front of you. So let's go get it. Anyway, let me read some more of your questions. All right. So Tony Boutte says, "What are your thoughts on Starbucks as a long-term investment? I like Starbucks." Howard Schultz, the CEO of Starbucks, the former CEO, has been speaking out about the company and its management strategy, and I bet that is really pissing them off. I bet they are so mad about that. I bet you that the people in Starbucks are so furious that because he cast a long shadow of the company. I don't know if he was one of the founders or something, but for him to make comments on how they're running the company is just got to be infuriating for the new CEO. So, but his presence is relevant, and it's going to shape how shareholders think. It's going to shape how the company operates moving forward. I think it's going to be a good catalyst for the company. Also, when China rebounds, Starbucks is likely going to see some benefits from that because they have a big, strong market in China. So, if you want to know my opinion about Starbucks, I don't just like it. I love it, and actually, I love it so much that I'm actually going to buy some shares in Starbucks today because and I just like their coffee too. All right, so let's see a few more questions. Let's see. Rose says, Dr. Boyce, in investing long term, what's your overall system you use to follow up on your portfolio? Is it after 2 or 3 years you purchase a stock, or what red flags do you look for when you check on a stock? Okay, that's a great question, Rose. There's a long list of things. I would say that it's the quality of the business model. If you're invested in a company that has a good business model that is good at making money, chances are that stock is going to continue to go up over time. If I see something that's really sort of permanently damaging to the company, like if I was an investor in or Tesla, excuse me, and Elon Musk, I know, wait, Freudian slip, right? Because everybody's been talking about the Tulsa real estate fund. If I was an investment investor in Tesla and Elon Musk died, I would probably not want to invest in Tesla because that would have a significant impact on the fundamental value of the company. So that's sort of my belief. Now, in terms of how often you evaluate your portfolio, that's a personal preference. My wife looks at her portfolio once every 6 months. She only makes adjustments once every 2 or 3 years. I adjust my portfolio 2 3 times a week. So it really comes down to your personal preference. Now, here's a link to something that I did. I did something called the Black Stock Market Weekend. Here's a link to the recording, and it goes through what I call the Dr. Boyce method, which is an 11-step process that I use to decide if a stock is good for my portfolio or not, or 11 questions any investor can ask themselves before they put an asset in their portfolio. It's like adding a member to the family or having another baby or adopting a child or something. You have to see how the kid gets along with the other kids and stuff like that. And they call that correlation in investing. So feel free to take a look at that. Or if you guys can't see it, just go to the drboycemethod.com, the drboycemethod.com. See, Greg Harrison, what are your thoughts on bets? I don't have it in front of me, Greg, but I believe that that's related to sports betting. I think sports betting is a growing industry because, I mean, think about this. You have a product that people become addicted to. It's like selling crack legally. I think gambling addiction is terrible. I think that you should avoid it at all costs. You should not marry somebody that has a gambling addiction or they will lose all your money. And I think that it is absolutely criminal and horrible that they're legalizing it and pushing sports gambling at sporting events. It's a scandal waiting to happen. There's already been an NBA player at the Toronto Raptors who was permanently banned because he was getting money to manipulate the game. You think he's the only one, really? That one of the top highest paid Major League Baseball players in Major League Baseball was caught up in a gambling scandal already. His manager was taking money for bets or something like that. You think that those are the only two people out there? No, there's thousands of them. It's like you go in your kitchen, you find two roaches. Just because you killed those two roaches doesn't mean you've ended your roach problem. You haven't even gotten to the beginning. You haven't even scratched the surface. And every therapist that my wife talks to, because my wife runs our Black financial therapy department in the Black Business School, it's the first ever. No other school has this. She says that a lot of her therapy clients are getting an overflow of young men with gambling addictions who have ruined their lives through sports betting. This is a problem that typically mostly affects young men between the ages of 25 and 40. That's who they target. So I'm not saying don't do it. It's like taking a drink. Sometimes like on the Super Bowl, I bet a little money on the Super Bowl. And then I bet on the Detroit Lions, and they did cover the spread, even though they absolutely blew the best opportunity they've had in 30 years. But so it's okay to dabble, but I encourage you to be really careful. Just because it's legal doesn't mean it's ethical or it's healthy. I hate the fact that they legalize gambling. I hate the fact that the NFL completely reversed their position on gambling. especially given the history of what they've seen gambling do to their players. There's a guy at Ohio State, my alma mater, named Art Schlichter, who was a great quarterback who won I think he won the Heisman Trophy, or he was a Heisman runner-up or something like that. And he got drafted number 6 in the NFL draft. And he had a massive gambling addiction. It ruined everything. In fact, it was so bad, literally 30 years later, just 2 weeks ago or 2 months ago, whatever, he got arrested with a crack pipe in his pocket. That's how. So his life has been garbage since college, and he graduated in the 1970s or something. So just be careful, please. It's terrible. All right. So anyway, a couple more questions. When do you? Let's see. When you do the different strategies that require buying two calls and a put. Okay. You know what, Jay Tolls, if you have a question about options, I would prefer you bring that to our options class. We're gonna meet for Prime class on Thursday, and if you log in to drboysprime.com, you can get access to that login and come on in. So I really I don't want to dig into options because that's going to go over the head of some of the stock market students. So this is stock market Tuesdays, but then we're going to have options Thursday, which again, go to drboysprime.com, and then we're going to do options again on Saturday. So we're going to have options all over the place. Let's see here. Where do I find the moneymaker list? I'm in the Prime program. Okay, great question, Derek. If you cannot find email support at theblackbusinessschool.com. They will send you the link. I wish Amani or someone was here. I thought they were coming to class. I guess they didn't know. But next time I'm gonna make sure somebody comes. Oh, there she is. I'm sorry. Amani is here. I'm so sorry, Amani. Please, I apologize publicly. I'm so sorry. Look at me. I need to just slap myself. So Monty, when you see me, you need to slap me because I messed up. Here she is in here. How dare I question a black woman on her game? All right. So anyway, so Amani has shared the link in there. So grab that link from Amani, and also you can email support at theblackbusinessschool.com. Amani's the head of our customer support team, and they are absolutely excellent. They love you. They care about you. She's been with us for many, many years. I want to say Amani's been here like 5 or 6 years now, or something like that. Chanel's been here 5 or 6 years. So our team has been part of our family for many, many years, showing that this is a great institution to work for and that they are damn good at their job and that we are very serious about you and we're very serious about everything that you're trying to accomplish. We want to grow with your family. So email the support team. It'll be like talking to a relative. And a lot of them are going to come to the All Black National Convention, which is in Lombard, Illinois, right outside Chicago. You can go to allblacknationalconvention.com. So feel free to join us in October, allblacknationalconvention.com. All right, so Antoinette, will the $5 a day plan work for young adults? Yeah, it works. It really works for anybody, Antoinette. It's not just. It's not. I mean, we designed it for kids. Ideally, your grandkids or your children. Starting that early will work. But remember, it takes anybody out of poverty in 10 years. So you're talking about over $25,000 liquid in a 10-year period. You can't be poor and say I've got $25,000 worth of stock. No one's going to believe you. So that is just that first step. But the cool thing is that if you give that time, you start that out for that newborn baby or something like that. That's the best thing you can ever do for them because they're going to be loaded by the time they get to 25 or 30 years old. They're going to have so much money that they'll never have to work for anybody. They can make the income of a surgeon just by selling stock options on all the stock that they would own by the time they're 25 or 30 years old. That's an awesome reality. They can make a surgeon's salary without having to go to college for 13 years, college, then medical school and 18-hour shifts and all that. There's money out there, but you have to position yourself to have a capital base. That's the secret. All right, a couple more questions. Do you have any thoughts on the SEDG Solar Edge? You know what? I don't. I wish I could look it up, Tanya. I don't because our time is up and I got to get out of here. But you can bring it next time or put your question inside and log in, or you can even email to support and I can look that up for you and we can bring that up. So I apologize, I can't look at it right now. All right, so let's see. Last question: how do you set up your teenage daughter to sell options on? Okay, as I mentioned, we're going to do options on Thursday, so let's save that to then. But I will answer every single question, I promise. And again, if you want to look at the options program, just go to Dr. Boyce Prime. Prime stands for Passive Recurring Income Machine. So drboyceprime.com. Also, if you want to get a copy of my book, The 10 Commandments of Black Economic Power, a copy of Powernomics, flashcards for children, financial flashcards for kids, any of those things, just go to drboycebooks.com. That's drboycebooks.com. All right, guys, I'm out of here. I will see you all soon. And tomorrow morning, of course, we're doing financial consciousness training, which we do this every single day, 10 a.m. Eastern. So join us for Economic Church. We're going to get down and we're going to learn and understand our economics. We're going to vibrate on this high frequency. And my goal is to get you to on such a high frequency that your friends are going to think you're a weirdo, but you're going to be the rich weirdo, which means that they're going to have to respect you because you're going to have money and power and respect. And these are the things that I want you to have in your life. And this is what I want for your family. So bless you. Take care, everybody. Love you. I'll see you guys tomorrow morning. Bye bye.